Hello and a warm welcome to my YouTube channel. In this video, I will be doing the outlook of Nifty. And before I get there, don't forget to share and subscribe to my channel, please. Now, Nifty, I have always been on usually been on the bullish side, as I had already done in my last video of July 8th, where I recommended a buy near the lows. And again, time to time, I have been suggesting bullish views and which have been near the bottom and it given us a rally. The last one on August 11th, where it picked up the lows from there and from where the market took off from that point of view. And I've been consistently been bullish, tried to be with the trend. Now, but in today's video, the outlook analysis is one of caution here, with the likelihood of a bearish scenario unfolding in the coming days or weeks in Nifty. So before we get it, let's get into the details of that. So let's take a look at what it has been doing since the pre-budget uh, lows, from the pre-budget lows, how the Nifty has behaved. And here we have, this was the sharp spike which came in Nifty. It's almost at an 80-degree angle, very sharp breakout after this pre-budget fall in the month of January. Then we had this flag-like structure out here, which was uh, which went on for some time till the month of April. After this, a usual decline of the first leg up. And after that, we had a steady move at a 45-degree angle, which is very typical of a bullish market. No much noise, calmly rises in large caps. So which was a decent move. And then came those dreaded 45 days where we saw a complete sideways move from mid-June till end of July, completely sideways market out here. And post that, we've had this fantastic move all the way up. So far, new high. Now, during this phase, the odd thing was that it was a scenario where we saw mid caps and small caps continue to run. We didn't have a correction in mid caps, small caps, which are now witnessing correction. Last week saw a very sharp sell-off in small caps and mid caps, and there is a big question mark whether they can now again survive to continue to rally and break the recent highs out there. But for that, another video. But right now, let's focus only on what Nifty has done. And now Nifty in this small move, which has gone up, as can be seen from here, is has got two gap ups active. One is here, one is here. Now both are bullish gap ups, which is a good sign. Uh, Usually two gap ups lead to, this is the breakaway gap up, this is the runaway gap up. So can be one more gap up at least, which would be the exhaustion one if it is covered, or the other sign which I would be looking for a top would be a open equal to a high and a turn from there, which is very typical of where tops are formed in Nifty. Now that's the short term outlook of what it has been doing till now. But what is the reason behind the caution is more in the monthly angle of what I have spotted so far. Now, for the reason for me going caution out here for this bearish outlook which I have in mind, there are three reasons, and they are as follows. The first one is that Nifty is completing 17 months from its March 2020 COVID lows. Now, 17 is a very important Ichimoku number, and usually it sees a pause or in trend, if not a reversal. So that 17 number does tend to have its impact. It's a very strong number for Ichimoku analyst. So we don't take it lightly at all. We take it with a major alert signal out there. The second reason for this uh, caution is again another part of the Ichimoku study is that since 2010, the baseline, or the Japanese term kijun, has never seen such a wide gap between price to the the baseline, the Kijun line. It's never gone to that extent of around 30% right now from here. And we can see out here when the last time it happened in 2010, that the correction from there was not only deep, around 50%, but it also did one with a lot of time. So it was a price and time correction which took place out there. It extended for many months, almost, yes, a full year. Full year. 2011 was a year of correction. So uh, this this scenario is again like that. Now we are in different times. We've had a COVID recovery. It's not necessary that history will repeat itself exactly that way, but it's definitely a sign of caution out here that unless this Kijun starts joining it or markets continue to rally, we could see some caution in this zone out here. A pullback kind of scenario could happen out there. The third reason is, and the final reason is something, which is a regular occurrence in Nifty since 2015. One could call S for September, S for sell Nifty also. And let's have a look at how this has worked out year on year, except for the year 2019. Every year from 2015 has seen this time of the year, that's August end to September, as a sell-off, long and winding month. Now, one by one, let's have a look at all of them. So that's September 2015. We have a 12.5% sell-off, 2015. This was primarily the sell-off had occurred in PSU stocks in this during that time, particularly PSU banks had seen a massive sell-off. There was talk about divestment and the FTOs and all, etc., which triggered a overall collateral damage on other stocks. So that was 2015. Now let's look at what it did in 2016. 2016 was a 5.5% sell-off here, which is mild compared to the previous year, 2016. But 2016, we must remember, was also the year of US elections the next month, and this was the November reaction to demonetization by initial reaction of the market. So this was the first part of the fall, the long unwinding, which took place. Again, September turned out to be the bad month out there in 2016. Now let's look at what it did in 2017, another year of sell-off, which a very mild one in 2017, not too alarming, 4.5% out here, as can be seen. There we go, 4.5%. Not too much, but look at this. Look at the rallies and look at the sell-off. It's quite clearly evident out here that in 2017, which was a good year for equities, just like 2020-21 has been, up, sideways down, up. So traditional months of sell-off occurring even in a bull year, even in a bullish atmosphere, we've seen that happen. Now let's look at what happened in 2018. This was the sharp sell-off. This was a sharp sell-off out here, 2018. That's a 14% fall. And this was primarily the Yes Bank and the DHFL saga, which led to a collateral damage across NBFCs, and almost every stock took a bad hit in that month. There were massive lower circuits in many stocks in 2018, September 20th or 21st. I don't remember the exact date, but that was the prime reason. That's the biggest one we've seen from 2015 to 2018 in terms of fall. 2019 was a good year, primarily in this month, primarily because the unwinding had already, selling had a little bit had taken place already in June. July was very sharp. Hence, August, September turned out to be good months, 2019. Now let's come to 2020. Fantastic year for equities post the COVID lows. So one would be surprised that we had a sell-off month, we had a weak month. Yes, we had. Can be seen out here. There we go. That's a sell-off month. That's a 8.5% decline from the lows. Now, we know normally nobody felt it so much because primarily because we had had a severe correction January, February, March. So you 8.5% looked very shallow compared to this, but it was there. It was a decline of 8.5%, and so percentage wise, we are seeing a steady decline during that part of the year. Now, if we look, let's go back to the daily time frame and see the how it's spanning out now. Presuming that this is not the top made on Friday, and this still has say a scope of 100, 200 points more on the upside. So if we take it as something in the zone of 16,600 to 16,750 out here, say let's take it at 750 out here, and we look at the minimum decline during those from the previous data that we have, that works out 4.5%, which is approx 16,000. So, and we have the Kumo out here in front at 15,750. So the minimum pullback expected from this zone is around 15,750 to 16,000, which will cover both the gap ups which are there, and also will be a pullback to this long sideways scenario that we had out here, which was, it will go and retest this breakout zone out here, which is a very typical part of pullbacks which we see. So all things suggesting that now, but that's the kind of range which looks like. But let's take a outlook which, and keep it in mind, but don't take it as a thing which will naturally happen. What happens if we look at the mean average of the previous 5 falls that I just discussed with you, which is 9.5% of the previous data, and then look at it, that works out something like 15,000, around 15,000, which is this zone, which is again this breakout zone out here of the flag, which has which is what you call this particular zone out here of 15,000 out here near this end of this Kumo out here, and or 15. So two zones one has to keep in mind for this decline. If it's a mild one, then we are looking at 16,000, 15,750, and then we resume the rally of what we've been doing, or we are going down further to retest this breakout out here. So either this breakout or this breakout has the likelihood of possibility of a retest to happen over the next coming weeks and months. How much time will it take to do that? How deep will be the correction? Let's first let it unfold, and then we'll review it, just keeping these levels in mind of 16,000 and 215,750. And if that fails to hold, then we will be looking at the outlook of 15,000 first and second. So first we focus only on the first one, and then we look at it from the second angle point of view. Now, my analysis could go wrong if Nifty continues to surge above 16,750 to 17,000. And for now, in my view, it's better not to get tempted with into fresh buying. Yes, there will be certain stocks which will continue to outperform day in, day out. But overall, stocks are getting into a wall. Some of them have already exhausted. Some sectors have already turned weak, and some are showing signs of bearish reversals already, one by one, slowly, where, because the overall picture of the index is up, the gloomy picture is not being seen on the chart. But if you go and see the advanced decline ratio, it's not very good. In spite of yesterday's sharp move, the advanced decline was not very promising yesterday. It was very good day before, but yesterday wasn't so good. I would like to quote, before I wind up this video, I would like to quote the great Jesse Livermore here. There is a time to buy, there is a time to sell, and then there is the time to sit out. Right now, in my view, is that time to sit out. It's not a time to go aggressively long. It's not a time to go aggressively short. Let the trend show the direction from here onwards and do. But yes, the suggestion would be not to panic and unwind your strong stocks which are there in your holding, but rather look to gradually exit the weak ones, because those were the ones which will take the hit first, and the strong ones might do, of course they might also do minor dips here and there, but then that would totally depend on your outlook of how long you want to hold a stock, and how much time frame you have in mind, and what is your upside target, and how you have managed your risk, and how much allocation of your portfolio is in that. So it will depend from individual to individual now out here. So once again, if you liked my analysis, do like the video, and don't forget to share and subscribe for it. Disclaimer: before I close this video, this is not a trade recommendation at all. Please do your own research, or get it from a professional before taking a final decision. And until then, take care and have a great weekend, everyone. Bye bye.